For those who've just joined us, we just started with a minute silence, just to pass our sincere condolences, our deepest sympathies, and our ending love to our brothers in Tanzania, and also ourselves being in the same region, East Africa. So I'll begin by introducing our panelists. So today we have a very wonderful topic. We want to see with numbers. We've had a number of stories being talked about how COVID has really impacted many things in our region and globally. But today we want to see what will numbers tell us? What will data tell us? We always know data gives you the other mirror. It gives you a chance to see within what could be hidden in that dark corner. It's a kind of a torch that you can be able to spotlight and get something from there. And today we have three wonderful panelists. To start with is Dr. Anthony Muveyange, who is going to present a report that already has all this data summarized nicely. And our hope is to see if we can get a lot of insight from that. So Anthony is a Tanzanian development economist whose research and policy focus include poverty and inequality, education and health, natural resources, international trade, and trade policy. In addition to that, also he looks at economic growth and development in Africa. So he has 15 years experience designing and evaluating projects and programs, policy advisory, designing and overseeing thematic research-related programs to generate robust and reliable evidence base necessary for making credible and well-informed policy decisions. He's based in Nairobi, so to some extent he's Kenyan. And maybe in the course of the presentation, we'll try to see what does he really think about Kenya and where we are really going to. So at the moment he's based in Kenya, and he's a research and learning director at Trademark East Africa. So overseeing a research and learning portfolio across the TIMEA operational countries. That is Tanzania, Kenya, Uganda, Rwanda, Burundi, Ethiopia, South Sudan, Malawi, Somaliland, and Eastern DRC. So I think I'll stop there for the moment, just for you to get to see who is our panelist today, and looking forward to his report. The next panelist is our very own award Diana. We've just exported her briefly to the European country to see what she can be able to gain from there. So Diana is a budding policy analyst, pursuing a Master of Science in Public Policy and Human Development at Maastricht University, with a main specialization in regional integration and multi-level governance. So she has a Bachelor of Arts in International Studies at Strathmore University, and currently she leads a team of dynamic youth, young people at Africa Young Trade Professionals Program, which envisioned as a program to complement the implementation of the Africa Continental Free Trade Area Agreement. So also we look forward to hearing from her, and maybe we can get the perspective of the youth. Where can they really be placed in this conversation? And the third panelist is Martin Bayer, who serves as a doctoral fellow at Strathmore University Business School, Institute of Public Policy and Governance. He teaches, undertakes research, consults, and grows enterprises with a focus on policy, digital learning, and trade. So he's a founding director of Utawala Pride Research Institute, which is the legacy of a 2013-2014 Ford Foundation grant to support devolution on Kenya. I know people here devolution, you want to throw in politics. Today we'll just look at numbers and policy. Let's see how data can really inform policy making. So also is a founder of N. Adlin Limited and co-founder of Nairobi Capital, and a trustee of AHS Endowment Fund trustee. So we welcome our panelists, and to start with us this webinar will be Anthony presenting the report. Okay, I like the way he's really put the title, Waving or Drowning. I don't know which one you'll have to take from there. Anthony, karibu sana. So as Anthony would mute, you can just unmute, then we can start off. Yes, as Anthony presents, please, in case you have any questions, ensure just post in the chat, and then during the time of the panel discussion, we'll be able to discuss your questions. Welcome everyone, welcome Anthony.
Okay, thank you so much, Dr. Okulu. Good afternoon, everybody. I don't think I need to say my name, but I always give people warning, don't try to pronounce my second name, because if you bite your tongue, I don't have insurance to cover for you. Well, you might be wondering what's the title, why waving and drowning? But before I start, maybe let me acknowledge the institutions that we worked with to develop this report. And this is a joint partnership with our research partners with the United Nations Economic Commission for Africa, the office in Kigali, and also the African Economic Research Consortium, which is based in Nairobi. They are research partners to Trademark, my current employer, and we came together to actually generate this report. Now, why waving and drowning? You know, when you go to the beach, you go to Mombasa, you sit sipping your juice by the beach, and somebody's swimming. You can actually see when they big and busy, you might think they're waving to you or they're drowning. You don't know, you can't tell. That's exactly the same phenomena why it triggered us to do this report, basically, because after the onset of the advent of COVID-19, there were a lot of shooting in the dark, if I am to put it that way. Policymakers really wanted to know what is going on, how are we being affected, but there was no evidence that was forthcoming. So that what triggered us doing this report, and it's basically trying to take stock, I'll talk about it later, of what has happened in East Africa, say for the past 1 year. Okay, and maybe later we'll do another report trying to take stock what has happened maybe 2 years down the line. Now, in terms of the presentation, the report is structured in 4 key areas. One, first is to give you the global context, to appreciate where the global issues on trade are, and then I'll focus in details on the report findings and what are then I'll move on to the policy implications and then sort of leave some questions on what next, what can we do, what can the region do to sort of respond to some of the issues that we see in the report. Now, when we start with the global picture, let's start off by looking at the global trade growth. And if you look at the pattern of the global trade growth, you'll see that it was decelerating before the crisis. So in other words, growth in the world was sort of declining before the crisis. And I will show you what happened after the crisis and during the crisis now we're in. So if you look at the broader picture of where the world trade was, annual growth in trade and GDP was pretty much flat. So in terms of growth, economic performance, economic activities across the world, if you look all the way towards the end of 2019, they are sort of flat, not so much economic activities happening at the global level. Of course, if you dissect that and look at the regional level, sub-regional level, for example, Sub-Saharan Africa, and you come down to East Africa, you see that a huge chunk of African growth is driven by what is happening in East Africa. It's actually, we are leading by a huge margin. If you compare East Africa with the rest of the regions in the world, you realize East Africa is actually doing way, way better. Okay, so you see that even on the trade side, we were declining. Things were not we're not as promising as they should be just prior the COVID-19. And I think you can quickly connect the dots there that with the onset of COVID-19, global value chains disruptions and so on and so forth, then things probably got worse. And what does that mean then for our economies in East Africa? Now, another stylized fact that you need to look at is the global value chains. There has been a lot of noise, if I'm to put it that way, about global value chains and the role of global value chains. Policy debates now, they're looking at global value chains vis-a-vis regional value chains. But if you look at the global value chains, they have been stalling. This is the graph that was coming from World Bank Development Report 2020, which focused basically on global value chains. And the current status quo, of course, if you look at what is happening, say in China and Europe and North America, China has started to recover. Recent statistics show that China has started to recover. In fact, it's recovering faster than the North America and Europe. But if you look more broadly across the board, the global value chains were also stalling, were declining in some ways. What about the share of South-South trade? So you see, global GDP, gross domestic product, was sort of flat. Global trade was declining. Global value chains were also declining, so to speak. But if you look at the South-South trade, they were dramatically increasing since 2000. This is good news for Africa. So that means trade among African countries was really increasing. And then we look at the report and see what that means, especially in the context of East Africa. So trade among African countries has been on the rise since the early 2000s, which is good news. And perhaps we can talk a little bit more on the African Continental Free Trade Area and why now it's important for African countries to trade with themselves. And what does that mean for the inter-regional trade that has been in the news and the policy discourse in terms of how countries can improve trading with each other. Okay. Now let's now come down to the pandemic and what those fears triggered. First of all, we know we heard from the health perspective, we were told Africans would be dondoka in the streets like Inzi, but it never happened. The same applies in other sectors as well. If you look at trade, the WTO, World Trade Organization, initial forecasts were very gloomy for Africa, basically. And they basically forecast, for example, in global mechanized trade, the contraction of 13 to 42%. If you read the report, you realize that current projections and current forecasts actually have turned around, and they seem to be very optimistic for Africa, and especially Sub-Saharan Africa. If you look at June 2020, initial forecast was 20% drop in global trade. So everybody was very pessimistic, so to speak. Everybody was very pessimistic. All the big institutions that deal with this forecasting, they were sort of, okay, global trade is not going to be resilient, it's not going to recover. But what we know now, that is actually, it was a false alarm. And then IMF also projected an 11% decline. So if you look at all the big institutions that are managing global economy, they are not giving good news. They are giving very depressing news. And some people were asking, so what does it mean for Africa? What does it mean for our countries? And where do we stand? If this global picture seems to be very gloomy, where do we, I mean, what's the future for us? Now, if you go further to our region now, this is the projections again from Economist Intelligence Unit, and they were very pessimistic, as I said, especially for landlocked EAC countries. If you look for Kenya and Tanzania, the impact was not that much. But if you look for Burundi and Uganda and Rwanda, especially for exports, there were huge reduction, predicted changes in export. They're all negative, basically, from 21% in Burundi in export to 37% in Rwanda, reduction in export. These are percentage change in 2020. We will see in the analysis that some of these forecasts were a bit far-fetched and they did not reflect the reality of what was happening actually in our countries. Now, what about the global trade in 2020? So I just portrayed the bigger picture of the entire global trade, but let's now distill down to 2020 and looking quarter by quarter up to quarter three. What we see now again in 2020 because of coronavirus, 2020 quarter one there was a slight dip, but quarter two to quarter three there was a huge dip and then it started peaking. So it's kind of V-shaped, which was sort of economic models were trying to predict that we are going to experience V-shaped. However, that remains to be seen to what extent that V-shape will remain resilient for as the virus is still mutating and unfolding in our countries. So you see that trade actually declined, but then it started to peak. It went as low as minus 16.4%, which is a huge decline, but then it started to peak in quarter three. Now, what about East Africa? So now we want to compare here, we want to look at the trade, quarterly trade, mechanized trade across Africa, and then we want to compare with our region, which is East Africa. If you look across Africa, you'll see again, it mimics similar trends to the previous graph on the global, whereby there's a huge dip between quarter one and quarter three of 2020. And let's see what happens to when we overlay the Eastern Africa bit, we see that East Africa was relatively better. Of course, they're all negative, but it was only 9.3 for East Africa, whereas it was 21.8% decline in Africa on average. So this is good news, and that's what I was saying. If you dissect African growth, a huge chunk of that growth is driven by East Africa, not West, not South, not Northern. It's East Africa that is actually driving the African growth, and the countries that are top performers are coming from East Africa. Okay. Now, so at that point now, you have a sense of what the global outlook looks like, what the situation in Africa, and what is the situation in East Africa. Now, why the report? Why the report now? Now let's get to the meat of the report. That was a starter, so to speak. Now, the report, there are three reasons what motivate the report. As I mentioned before, first, poor set of evidence. There was no evidence really. In March, when Corona was hitting, we were relying on what newspaper were saying. Oh, there's this, or there's that. There was a lot of guessing here and there. So there was no evidence. So we felt that we needed to generate something that is credible, data-driven, as Dr. Lukuru said, and present to policymakers to inform the way forward, especially when countries are discussing economic recoveries, especially what sectors should be focused on. It wasn't clear. I attended some of the high-level meetings at the EAC. Sometimes decisions were guided by ad hoc. Oh, maybe we did that, we had that in the news. So we felt that there's a need to generate that. The second reason is we wanted to also provide a comprehensive understanding. We have this pandemic, it's here with us. What do we make out of this pandemic? Okay, can we keep on saying, wait for the Minister of Health to say, hey, you guys wear masks? We need to be able to prepare ourselves. We need to get a sense, at least from the trade sector's point of view, we have a sense of the comprehensive picture of what is happening across the performance of trade in our countries. And finally, the last reason is sort of to understand, take stock 1 year down the line after the COVID-19. What do we learn? What are the issues? What can we do? And this is particularly important when you think about countries discussing economic recovery plans. What sectors should we prioritize? What sectors have been affected the most? And so on and so forth. So these are the reasons what triggered the report. And I think it's very, very timely now that countries are discussing, and COVID-19 is still here with us. Now let me transition to the findings. Now, what do we learn from the report with all these justification of why we needed to have the report? Allow me to transition to the report findings and take you through what are the key findings that we have in the report. First of all, what we see in the report, EAC trade recovery. So, and as I say, the report focused between, if you look at the comparative analysis that we did year on year or month by month, we started January 2019 all the way to October 2020, okay? So it was, we focused the whole period of 2020 plus 1 year behind so that we can compare to address issues of seasonality and so on and so forth, as it is usually done in economic analysis. So what we see in the data is that trade is recovering. And if you look at this, the graphs, you'll see that Q1, Q2, Q3, total exports from EAC partner states were low, but they were picking up as we went into the virus last year. That's good news. That's good news. And remember, this is going counter with the prediction that the Economist Intelligence Unit sort of had for our countries in the region. This is real data from countries. This is data from national sources, from Kenya National Bureau of Statistics, from the Tanzania Bank, Central Bank, Uganda Central Banks, and they do seem to indicate that we were recovering. And if you look at the most recent statistics that I've looked at up until February, we still see that trend coming and countries are picking up. So that's good news. And let me maybe say that in terms of this report, we have 6 main key findings. We have positive, the good ones, and we also have the not so bad, so good ones, and I will talk about those. Now, what are the drivers? What are the drivers of these? What are the drivers of these exports? Now, and here we can look at countries. So if you look at Kenya, and I know I'm Kenyan, and thanks Dr. Lokuru for baptizing me to become a Kenyan, I appreciate that, and I take it with all my heart. If you look at Kenya, what drove this EAC export recovery? In Kenya, for example, there's an increase in export of manufactured goods. If you look at the data that KNBS releases, export of manufactured goods increased, especially on industrial supplies like non-food and capital equipment, which is really good. This year by exports, we are talking both, and I will talk a little bit shortly, we are talking both of intra and extra regional exports. Intra meaning Kenya trading within East Africa. Extra means Kenya trading outside East Africa. What about Tanzania? If you look at Tanzania, and maybe I can take a step back here for a second, what happened with Corona, there are 2 parallel events that happened with Corona. One is the fall in import prices because of the fight within the OPEC plus countries. You know, import bill went down, and that happened slightly before Corona, before COVID-19 started in China. And also because of COVID-19, gold prices went up. They went up because they were safe haven for investors in the world. So countries like Tanzania, which a huge chunk of its export is also gold, benefited significantly. And I'll talk about it that also in other countries like Burundi, Uganda, and Rwanda, they also increased. They had some significant increase in exports outside to their countries. Now, increase in export of manufactured products, that's one, but also gold. And gold was very prominent. I want to emphasize here. Tanzania recouped quite a lot in terms of export earnings from gold exports because of the prices that were hiking significantly because of the demand pressure in the world market. Okay, but then again, even if you remove the exports, so if you think of exports of gold as an outlier because of the price pushes that are happening at the world stage, then still the exports of the other commodities are still rising, which is also still good news. And not necessarily that exports recovery was being driven by gold across countries, gold exports. Now, what about now with the coronavirus? One of the fundamental econometric questions that people would ask, should we expect some structural breaks? And by structural breaks, I mean because corona was a shock, was an economic phenomena that is a shock. It's a social, public health, and economic phenomena. Do we expect data to behave in a particular way? Do we expect, for example, suddenly we see a dip in exports, a dip in imports, and so on and so forth? And so we have to make sure that we do that test because it's very significant. Otherwise, there could be other unobserved factors driving such trends and not necessarily corona. So we did that test, and our structural break test does seem to indicate, for example, if you look at exports for Kenya, structural break started to happen, although it's marginally significant. By marginally, for those who are doing statistics, 10%, I'm not sure how to say this without confusing people, it's 10% significant. And then if you look for Kenya, export structural breaks actually started in April, meaning the dip in exports in Kenya was recorded for the first time in April. And just to be clear, the type of structural break analysis we do here, there are two types. There's unknown and the known date structural break. So what we did here is the known. We had a prior based looking at the inspection of the trend in the data, and the data, for example, from Kenya, Rwanda, Tanzania, and Uganda. We were able to see some dip and say, okay, maybe this is the structural break, let's test it. But we don't see the same for imports. It's not significant. So it was only export that were sort of affected by corona, so to speak. For Rwanda, we see for both, and imports actually is highly significant at 1% level of significance. What does this mean? And of course, Rwanda is a landlocked country, so you would expect that imports with the closure of global supply chains, relying on Port of Mombasa and Port of Dar es Salaam, delays, and I'll talk about increase in transit time, then you would expect, obviously, Rwanda to experience a dip in its imports. Tanzania, we experienced dips in its exports from March, similar to Rwanda's imports. Again, as I described before, this signals that to what extent, and maybe this is a policy discussion, to what extent over-reliance on global value chains make our countries vulnerable, and we can discuss that towards the end. Okay, what about the third key finding of the report is intra-EAC trade exhibited greater resilience compared to extra-EAC trade. Okay, now, if you look at the panel, from January to September, intra-EAC, as I say, this is trade, say, for example, between Kenya and Uganda, Kenya and Tanzania, Kenya and Burundi. Extra-EAC, it's outside EAC, Kenya and, say, South Africa, Kenya and US, Kenya and UK, which I know is a topical issue right now. I don't want to get into those debates. But what we see here is that there was some resilience in the way that the intra-EAC vis-a-vis extra-EAC trade behaved. And Kenya accounts for half of the April intra-EAC decline, but the country had extraordinarily high exports in Q1 2020. There's a piece that we did at Brookings sometimes in May last year, and one of the things that we saw in the second quarter of Kenya's resilience to trade was, for example, the tea sector was very resilient. From March all the way to May, exports were actually overshooting way higher than the similar patterns in 2019. And this is exactly what we're trying to capture here. What we see also for extra-EAC, there's a spike in extra-EAC export. This correlates with the surge in minerals, particularly gold. You see that, for example, Burundi exports increased to about 45 million in July from nil in the previous months. This is a huge amount. and that shows because of the again exogenous shocks in the international world market for gold prices, it triggered gold exports to skyrocket overnight. Okay. What about trade balance? And trade balance here, we are referring the difference between what we export out and what we import in. Over the years, trade balance in East Africa has been persistent for many years, I think since early 2000, for the past 2 decades. That means we have been importing more than what we export. So we've always have chronic trade deficit across countries. But what we saw here is that there's an improvement. Of course, this is still negative. It's like if you compare the dwarfs, there's also the shortest dwarf among dwarfs, so if I'm to put it that way. So if you look at the trade balance, the red line there, you will see that it was actually increasing, meaning that inputs were shrinking. And again, if you look at what we just discussed, import, because of structural breaks, imports stopped coming in at the port of Mombasa. Cargo throughput also declined. Because of that, and export were also improving, you will see that the difference between export and import was improving along the time, at least in the first 4 or 5 months since the onset of COVID-19. And then after that, because now government put measures in place to ensure that countries are supported, imports started to come in, global economy started to open, global value chain started to open, you see that we are going back to the old patterns in terms of the trade balance. So we had a narrow window where trade balance sort of narrowed temporarily, which was a relief, in part because import bill went down. Remember, import prices, fuel went down. So countries that are net importers of oil experience a relief. They spend less in acquiring or in buying oil from outside during that period when prices were low. Okay. Now let's look at what. Now we are going more granular at the port of Mombasa, and I know this is very interesting for Kenya in particular. So now we are looking what we call a trade facilitation. Because of Corona, we saw global value chain, countries locking down their borders, not trading anymore. We saw the number of vessels coming through our ports also declining. What does that mean? So if you look at recovery, what we are saying in this report, we are seeing some recovery in the port of Mombasa, also the port of Dar es Salaam, which I'm going to talk about shortly. For example, if you look at the between May for imports, the reason why there was a dip because of the value of cargo coming was low. Of course, lockdowns, closure of the economies, global economy, global value chains. The same applies to exports. But in Q2, we see some also decline in import prices. For exports, dry bulk exports also declined. So you see now all of this triggered for the first downward trend. But after that, things started to peak. We have seen countries opening up their borders. We have seen trade resuming globally, and that has opened the port of Mombasa to start being fully functional. I've not seen I've looked at the current statistics up until January, and they seem to be very promising for the port of Mombasa. If you look at the port of Dar es Salaam, the same story, the same narrative holds. That in the beginning, there was not so much cargo going through the port. Midway, it precipitated because of the declines in import by Tanzania coming in the country and also export to DRC Congo. But after that, in Q3, the country picked up. Now, so far, these are the good news. These are the good news. These are the good stories that the country's recovered. We see the port of Mombasa, port of Dar es Salaam. We see other aggregate variables in trade, import, exports doing very well. What about the bad news? Now, the bad news, what we see in this report, we analyze data. This is informal cross-border exports from Uganda. And it's really bad. We looked at the data and we analyzed what we discovered. Informal cross-border exports actually declined by 97%. If you look at Q1, the decline was about 44 million USD. Up to November, that's 1.15. The difference between the two, that's 97% decline. It's a huge decline. In fact, yesterday we launched a report on cross-border trade and women traders. Even weekly profit for women, which is not part of this report, declined by 97.3%. Now, what is interesting, even when countries opened up, we started now going to Busia, crossing border to Uganda, you see persistently that cross-border trade exports are still down, which signals that the impact of COVID-19 was very profound to cross-border traders, mainly our women and youth. And there are some ramifications in terms of policy and what can be done. Another bad news that, and I know if you have been following media, you will notice that there has been long trails of trucks in Malabar and Busia. You have seen those in the news, and we see exactly the same. And unfortunately, we are also seeing the same pattern happening on the Central Corridor. So the Northern Corridor here from Mombasa to Malabar, Mombasa to Busia. If you compare the transit time, how long it takes from Mombasa to Malabar between Q1 2020 and Q3 2020, you see the increase in number of days. In fact, Mombasa to Busia is even worse. It actually doubled from 8.3 to 16.6 days to travel cargo from Mombasa to Busia. The Central Corridor, we see the same pattern. So what we see in this report is that there has been an increase in transit time, and we all know that transit time translates into higher cost of trading in East Africa. So it's like there's a reverse of gains, so to speak, because if you look at the data from 2010 all the way to 2018, there was a huge significant decline in transit time and transport costs. But now with this, during COVID, we see a U-shaped type of pattern happening. Okay, so this is also another not so good news. The second not so good news, before I jump to policy implications quickly, is that if you look at the data, when we analyze the prices, the good news to some extent is that prices were stable, where there was no inflationary pressure in our region. Prices of commodities were stable, and there was not so much price hikes. If you look at the data, for example, except for fuel, the purple one shows that prices actually year-on-year changes were actually positive. They were very, very much stable. Now, if prices were stable, the most discomforting finding we have now is we see heightened dependence on commodity exports. That countries rely more on commodity exports, and I'll talk about the need for diversification of our economies to look into other sectors that we can actually invest and improve our productive capacities. So for Kenya, the focus was on tea, ring-fenced supporting exporting tea. And as I said, the study that we did with Brookings Institute, we were able to show Kenya's export of tea, and Kenya is the largest exporter of black tea in the world, was actually increasing up until May. After May, the rate of increasing, the rate of acceleration started to decline. In other words, of course, it was still high relative to 2019, but it was declining. If you look at Uganda, coffee, the same pattern. These are all commodity exports. If you look at gold, at least gold saved our face because of positive price shocks in the world, that gold exports also increased. What this says is our economies are still dependent on commodity exports, and they do make us vulnerable. Whatever happens in the world market, it actually hits home hard, and our sectors are affected. I will talk about policy implication for this shortly. Okay, so I'm sorry, I might be too fast. I don't know if it's too fast. I'm racing against time, but let's now transition. Now we have seen what are the. Okay, thank you.
Okay, don't worry about the pace. You're fine.
Okay, fantastic. Thank you, Dr. Ukuru. So now maybe we can transition on the policy implications. Now that we have seen the good news and the impact, at least these are all data driven. It's not Anton speaking. It's actually from the data documenting what we are learning across countries. Now, what are the policy implications? That's the most fundamental question. Now, there are about 5 policy implications for our countries. And I know this will be a subject, an area for a lot of discussions during plenary. So first, there's a need for, more broadly, there's a need for urgent policy action in the 5 key areas. One is continued support of key export sectors. As I said before, there are some sectors that performed very well. We understand countries are having fiscal pressures, debts and whatnot, but if these sectors that were resilient during COVID-19, these sectors that did very well, they need to be supported continuously. If need be, countries can ring-fence such sectors, okay? Second, we saw that we are vulnerable because when China, for example, China exports 30%, over 30 to 35% of our imports are coming from China. Imagine when China closed its shop and say, okay, we are locking down the country, even toothpick, we had to actually struggle to see where we get it from. Remember, there was a move to even have our own local manufacturing to produce our own masks because we couldn't rely to wait until China opens its economy. Okay, now that speaks to the need to strengthen our regional value chains. One of the key areas in the African Agenda 2063 is to build African productive capacities. Okay, the ability of African countries to produce locally, to build that industrialization agenda and socio-economic transformation. So the need for East African economies to consider strengthening regional value chains in key sectors that we rely on for inputs, in key sectors that we need to continue to produce locally, especially in light manufacturing. Now, what about double down effort in diversifying economies? I talked about heightened dependence on commodity exports. And that means it's high time now for our countries to think about diversifying our economies. Relying on coffee, tea, and gold makes us vulnerable. There are so many sectors that we can add value. There are so many sectors that our countries can diversify, so much so that if we go by the financial adage that don't put all your eggs in one basket. Let's diversify our economies to help cushion. If there's a shock in one area, then we can cushion our countries in other areas. On informal trade, as we saw, I said it totally collapsed, and even recovering now, it's really still a challenge, very slow. We need to figure out ways to support informal traders, and this has implications for poverty, especially because informal traders at the border mainly are women and youth. So if this trade is actually has collapsed, it has implication on how it has livelihood implications. It had poverty implications. World Bank released a report last year on reversal of fortunes on global poverty because of COVID-19. And this is an area that actually requires immediate action. And then we have seen how technology actually has worked to address some of the challenges that came by COVID-19, the introduction of e-commerce, the introduction of a lot of interventions. For example, now we are doing this webinar virtually as opposed to doing it physically at Strathmore. So these are some of the interventions that came because of COVID-19. Do we have more that can help abate some of the impact of COVID-19 on trade? The answer is yes. What can we do? Invest more. Maybe we can work with donors along those lines. And for example, here I can speak of what Trademark has done. Jointly with East African community and the governments in the region, we have developed what we call regional electronic cargo and driver tracking system to enable e-certificates for cargo drivers, cargo truck drivers who are actually crossing borders. So instead of being harassed to address all these long queues at the borders, now they can be tested in one country. You have e-certificate that can be accepted across the other countries to make trade as smooth and as frictionless as possible. Okay, now that was the policy implications. What next? I know you might be wondering, what next? Is it good enough saying all of that? So I like to pose questions here. And I want all of us to think, what do these findings mean? And I know some people have asked, and perhaps now I'm going to preempt some of your questions. What do these findings mean for EAC recovery plans? And again, if you look at EAC as a region in totality or countries specifically, and I know Kenya is making effort in that space. We work with Ministry of Trade very closely to support some of the initiatives, and we'll talk about that later. For example, on CFTA. And what can we do to recover? What can we do? What do these findings mean? What can governments do? So that's the question that when we launched the report, we posed to policymakers. And then number two, COVID-19 is still here. If anything, it's mutating, and it's actually very dangerous now than it was before, right? What can we do? Because the gains, all these V-shaped I'm talking about, are likely to be wiped out in a matter of seconds if we don't do something. What should policymakers do? So this report is meant to trigger such discussions across a whole range of issues, across a whole spectrum of sectors that are affected by COVID-19. And in the donor community, how can they support? My employer, Trademark East Africa, is funded by 10 donor communities, 10 donor organizations. And the goal is, again, to make trade as smooth as possible, as efficient as possible, to reduce trade barriers, make trade competitive. And within the space of COVID-19, we even have a $25 million program. It's called Safe Trade, to make sure we are supporting governments to respond to the challenges of COVID-19 in East Africa. So these are short-term questions. Now, what about long-term? So long-term strategic questions here. First of all, which market do we target in the future? Should we low income? And this is a very fundamental question. And I know now there are discussions about Kenya national strategy. I'm involved on CFTA, and Kenya has identified specific markets where it wants to target to export some of these goods. I don't want to get into that because it's still in the making. So should we focus on the slow growing markets or fast growth or low income market? Think of Africa. If we were to increase inter-regional trade, which markets do we target? For Kenya, where should we sell? Obviously, selling to Tanzania with the frictions every day, you have to be careful. But obviously, maybe we need to explore markets in Nigeria. Maybe we need to explore markets in South Africa. And how does trade grow? We need to pay attention to how trade grows. Only 40% is growing through intensive margin. That is more of through the same product, not extensive margin. So we need to think creatively in terms of what are these approaches that we can think about designing strategies and policies that can respond to these issues. And finally, how can interregional trade and CFTA support economic diversification? One of the fundamental benefits of African Continental Free Trade Area is to boost what we call the unified continental market of 1.3 billion people. And how can CFTA support economic diversification? How can CFTA support regional value chains and increase the market for our goods across countries? Thank you so much.
Thank you very much, Anthony. Really enthused and really seeing many questions already are coming in. And wonderful for just showing us what data can really do. So I think all of us have already realized data and analytics are the foundation for the data-driven policy making. With that data, you can be able to really achieve a number of things. You're able to see what else can I do with the donors, what's happening within ourselves. It becomes a mirror. It becomes a mirror for you to really see yourself within. And I'm just glad to see a number of participants who are coming in to see what their classmate is doing. So for some of the audience who are in here, maybe you're alumni, our partners, Anthony is our student. He's a master's management agribusiness student. Despite the fact he's a PhD, he's come back to class again to see what he can do now with the focus of the agriculture sector. I see, just to recognize a few students from public policy class, Master of Public Policy. Welcome, everyone. And I think some MBA students there. Well done. I think before I really go deep into the panel discussion, I just want to give a few minutes to the other panelists to just react on the presentation and maybe just tell us a few things before I can shoot questions to them. I will start with Martin. Martin, maybe as you just prepare to react on the presentation, also just try to talk about the role of universities like Strathmore, for example, in this emerging trade landscape outlined in the report.
Thank you. Yeah, thank you very much, Dr. Olukuru and Anthony or Tony, Dr. Anthony. Thank you for that very illustrious presentation. First of all, I wanted to echo a minute of silence earlier on, and for our brothers and sisters in Tanzania, we wish you our condolences on the passing of His Excellency President Magufuli. May he rest in peace. I would like to react to this presentation, not so much from a perspective of economics, and I think Anthony will be well equipped to address those questions, but from a perspective of public policy and a perspective of innovation systems. One of the things that really stood out in this report was the graph you had showing the formal versus the informal sector. And I think the key takeaway, one key takeaway from this report is that the informal sector has suffered somewhat. Youth and women, cross-border trade in that informal realm. You had a very powerful graph, and I think you kept mentioning that number, 90, yeah, exactly that one, 97%. I'll want to use that as one of my focus areas for all my reactions today. And then secondly, the sets of questions you have raised. First of all, the policy recommendations, but also the short-term questions you've raised and the long-term questions. I recognize we have a lot of our students here from Strathmore, past, present, and future. And if we use an innovation systems approach, data is key, as Dr. Olukuru has alluded, and evidence-informed policy change is a key way of impacting citizens on the ground, not only in our national context, but across the region. What this report is saying from that bottom-up data-driven perspective is that what was anticipated at the beginning of the year is not as bad as the reality today, cutting across with the exception of the informal sector. What this report is saying is that there is room for additional analysis, either by sector or by region, or by type of technology or by country, to try and give slightly more nuanced insights for decision makers, those who are at the helm of government. And this analysis requires experts in economics, in policy, in business, in engineering, etc., all these different disciplines. So how do we distill that? And then this report is also alluding to the fact that as the East African region, we have done better in an economic sense than other regions in an African context. And the data reveals this. So there are some things we've done well. Maybe there were some things working in our favor. It will be interesting to see comparable insights from other regions. So for the other regional economic communities, can they come up with a similar report? But getting to the question from Dr. Olukuru, given that perspective, at Strathmore, we focus on this idea of analyzing public policy using the policy process model, a very systems approach. What's the problem? What are the policy options? How do we implement a prioritized policy option based on the problem that has been identified? And then finally, how do we monitor and evaluate? And this presentation has done all that very, very well in the context of Trademark East Africa. And it also equips itself to evidence-informed policy making. I want to single out some areas that I think as a university, Strathmore, we have a presence in Nairobi, we're also in Uganda, Tanzania, and Rwanda, but active across the region and the continent. There are specific areas, agribusiness, and how we look at commodities in that particular sector, food. Recently, we had some struggles in the maize sector, and within the past week or 2 weeks in East Africa, I think Kenya had decided maize could not be imported because of issues of aflatoxin. Within a day or 2 days, we noticed there was a gathering of leaders, some key conversations, aspects of that decision were reversed, and the necessary restrictions were put in place, but doors were also opened for trade to continue. We've got our key actors in the financial services sector. When we train our own students at Strathmore, and I noticed we have our master's students, Asaska, I've seen you as part of the audience. We've got undergraduate students, Rakeli, I think I've seen you in the group. How can universities try and repackage the products that we have, our students, so that they are immediately targeting challenges in the economy? And within the last year, I teach in our bachelor's programs, I teach entrepreneurial classes. With various other colleagues, we've been able to work directly with ABSA as a bank to try and engage their supply chains in Kenya. So their specific suppliers, to see how they can embrace sustainability, but also to see how they can plug into the Africa Continental Free Trade Area. And Anthony, from your report, I can already see certain trends where, for example, addressing some of the challenges of the informal economy are ways that suppliers of these larger actors, whether it's banks like ABSA, or whether it's telecom companies like Safaricom and the various versions in the East African context, how we can actually get down to the grassroots, so that as those big actors are doing well, we carry everybody else along. And then a third example is this area of trade, and I think I'll address it later. SMEs, as a university, we've been doing quite a bit from as far back as 2018. And I see various attendees in the panel, someone like David Ndolo, who have attended some of our recent webinars. Technology has allowed us to convene to teach, to convene to hold conferences, to convene to consult. And it's a very interesting technology that's allowing us to address challenges in real time. So Anthony, when I see a report like this, which gives us a lot of evidence-informed policy options, which we can act on immediately, I think the university in the context of an innovation system can be a very key actor that allows the flow of knowledge, information, the flow of products, actual items we design for the retail sector, merchandising sector, as this report captures, or the services sector, and flow of individuals, human beings, in ways that we can link this report to solutions on the ground. So Dr. Olukuru, allow me to stop there. It's really this idea of a triple helix of university, government, and industry. And this report anchors exactly what we can do using that framework.
Thank you. Thank you very much, Martin. You know, as an engineer, I always just imagine you can go on and speak many things in detail. For those who don't really know Martin Bayer, he was a mechanical engineering degree from MIT and also an MSc public policy from Harvard Kennedy School. Now I want to bring in Diana, and by the way, from just you can see all the panelists are bringing the value of data, because at the end of the day, data can never truly speak for itself. It needs and relies on human interpretation to make proper sense. So it's us, policymakers, it's us, economists, analysts, data scientists, that can go back and question that data and see what story can it tell you. So let's bring in Diana. So all the way from Maastricht, I know by there her interest is in trade and tapping into the fourth industrial revolution. Diana, I just want to hear your reaction, but also comment briefly on the emergence of this regional trade in recent years. Just comment briefly on that as you also react on the presentation. Welcome.
Thank you very much, Dr. Olukuru. And I like how you talked about data as the reimagined trend, because in a sense, what we need in Africa is to create citizen data scientists. So we might not have enough capacity to train every single person to understand how to integrate and to deal with data, but we can have at least small snippets of individuals who are able to understand a bit of the process and to integrate it or interpret it in different contexts, especially across sectors. For me, this report, as has been presented very well by Dr. Anthony, is a point of departure. And I say a point of departure because I know a lot still needs to be done. And I think we can all agree among the panel and among the citizens who are with us that a lot still needs to be done in terms of being able to model different aspects for the future. For instance, I've seen a question to the panel that asks, what about today? You know, this is data about 2020, but we need to ask ourselves, what does this mean for today? And that's a very good question, because it means that we actually need to have the kind of systems that can constantly be generating information, constantly be evaluating information, constantly be checking that the predictions that we are making today, what has changed tomorrow that we need to put in terms of aspects that can help us to revise that information. Coming from an international studies perspective, and just to touch on the question that you asked in the second aspect, when you talked about what is affecting regions right now, and I'd like to put it in two ways. So I'll talk about East Africa, and then I'll talk about the global aspect, but I'll start with the global aspect. So I think we can safely say that globalization has, in a sense, not lived up to its expectations. So people expected that we can open up our countries and then we'll just start benefiting from trade. But after some time, states realized that this promise is not being fulfilled. So what happened? People decided that they need to go back to their country and to build their own countries. But the pandemic has literally shown us that we don't have enough resources within our country for us to survive and to feed and to take care of their health and just to be able to protect our people. So what happened in that situation where the globe was not enough and the country was not enough? That's where the region came in. And the East Africa community, in a sense, is that region for us and for the broader countries within our space. So what exactly does it mean for us to actually develop our region? It means that as we continuously grow, because of course we have to admit that some countries are stronger than others, we have to admit to ourselves this, because in a sense it's also part of our bargaining. It's in a sense part of our bargaining power, in that if I'm a small country and I'm able to convince a bigger country in my region to help me grow, help me develop, and as they help this small country develop, they also gain the competitive advantage from international investors by saying, We have a regional block, we have structures. If you want to trade with our region, you can be able to come to Kenya, you can be able to understand that we not only provide you our country as a trade partner, but the entire region. So there's a win for both sides of the cake. If we're able to develop that sense of thinking, I believe that that is the next step towards regional growth, and especially in the East African community. As a point of departure, again, this report is extremely crucial, but I have to emphasize that a lot still needs to be done. So I take it back to you, Dr. Olukuru. Thank you.
Thank you very much, Diana. I'll still come back to you in a moment, but you mentioned a very wonderful indication there. What's happening today? What can we do for tomorrow? Which still goes back to the valuation and maybe how to extract loss of value from data. That knowing what has happened yesterday and today might really be of critical importance, but really knowing the future and what really has to be taken from there is what's very critical. And in this panel today, Diana, you're representing the youth, okay? And Anton just commented how the cross-border trade affected the women and the youth. So from your own perspective, what do you think was really the main implication of this COVID-19 to the young people who are seeking jobs, both, in fact, the whole entire region is Africa, and what opportunities do you think are available?
Thank you very much for that question. And I think I can begin by narrating a bit of a story of one of my close colleagues who experienced this directly.
Yeah.
So she was very active in her undergraduate and has been involved in very many different projects. But when the pandemic hit and now we were just completing our education, with searching for jobs, and she goes to an organization and asks, can I work for you? And they tell her, you have a very good CV and your experiences show that you have a lot of expertise in this, or at least you've invested in getting some experiences. But we just received a lot of applications from people who have been in the field for 10, 15 years, who have just been retrenched because of COVID. And we think because they have more experience, they have worked in this and that sector, and they have something to back them up, we're going to employ this other individual because they have worked for a bit of time and they have something to back them up. So we have the situation where the young people who are just joining the industry are asking themselves, okay, I did everything I was meant to do. I was to study, I was to do this, but now the jobs are not only shrinking, they're almost non-existent, at least in the young person's mind. And that's a frustrating experience, especially when you're just starting your career. But on the other side of things, you also realize that young people were also very dynamic. I mean, there was innovation, especially if you remember the Kenyatta University students who came up with a ventilator. There were some individuals in different sectors who were helping organizations transition, for especially SMEs, to online trading, because young people were very conversant with how to deal with that. So on one side, you see individuals who had come from classroom study and they're trying to get jobs, but they can't. And then you have the other individuals who are thinking, okay, how can I make use of the skills that I have? How can I create some form of tangible value, even though I'm not able to get the very direct job I had thought I would be able to get? And that's where the nexus is. It's the fact that young people have to ask themselves, what can I do with what I have, and how can I incentivize somebody to create some opportunities for myself? If for example, with that aspect of helping small businesses that employ young people, how can I make sure that I'm in a space where they can see the value I can provide them, and once they can see the value that I have quantifiably shown I can provide them, then I can see how they can employ me in that space. The Kenyan government, I must say, has taken an initiative to help young people get online access to digital jobs. And I think many of you might have heard, or at least I'm hoping you have heard about the Ajira digital program being run by the government. It was launched about March this year. And the idea is to help people connect with jobs that are especially abroad. And that creates another question. So I'm providing services to an entity that's not in the country. Does that mean that I'm going to be taxed? Is that going to be taxed as telework? Is the money going to the other country? These are the kind of questions that the legal system would then have to come in and fill in and at least help us to understand. What does it mean when you digitize jobs? What does it mean for the country? Is the country still earning? And those are the broad aspects, if I was to just put it in a nutshell, that young people can actually come in. And because we're very digitally enabled, we can be able to create that bridge between what has been and what we can create it to be. So that's in a nutshell what I believe is the essence of the
Thank you very
space
much.
that young people are
Thank
in.
you, Asante Sana Diana. Thank you for that comprehensive response to my question. So I'm starting to picking questions, and maybe I'll go back to Anthony. I hope you've taken some breath. Wanted to get a glass of water. Now, back to your report. Of course, that 97% decline cross-border trade was a great impact, of course, to the youth and to the women, what I was just asking Diana, but above all, also the small businesses. So maybe I just want to get your some more comments from yourself. Policy side, what does data show us? What should we do to just maybe recover this scenario in terms of the women and the youth? But also, when it comes to small businesses, what should we really do as a region to just really help them be resilient and just cope up with this pandemic?
Thank you very much, Dr. Olukuru. And maybe in this case, I can use the agricultural space to discuss these SMEs. And one of the areas that I'm very fond to discuss is what in the policy space we call the hidden middle. It's not the missing middle because it was usually known as the missing middle. And if you look at the agricultural value chains, you have the downward demand, you have the upward supply, and you have the midstream. Current statistics, for example, in the agricultural sector, what we consume in supermarkets is only 5%. What SMEs and middle people who are in the middle midstream chain, it's 95%. So what we buy in the supermarket is only 5%. This is the data from Asia and Sub-Saharan Africa. Now, what can we do to support these SMEs that are organically changing, and what now in the policy space is called the quiet revolution? There is a revolution that is happening underneath, and we are here, we are talking. People are inventing things are moving fast. Why? Because cities are being developed, urbanization is picking up pretty fast. In the agricultural sector, on the upward supply side, there's a lot of mechanization, commercialization of the agricultural sector, and you have quite a lot of people in between. There are a lot of supply chains that have emerged, both in urban areas. Think of the Ubers, think of services that are providing support services along the value chains. And if you go a little bit back in the value chain to the agricultural sector, you have people who are supplying to the farmers, the inputs. There are quite a lot along those lines. And the most recent phenomena is what we call the rural non-farm economy, whereby there's also a trend, the rural-urban migration. Youth are going back to the rural, and they go there, open the M-Pesa shop, they open this. So you see, there's also a sort of a non-rural factor economy that is happening, meaning people are not only engaging in farm, they're also engaging in other activities. Now, in terms of SMEs are backbone of our economies. Can you hear me? Can you all hear me?
We can hear you, Anthony.
Yes.
I think Ken should check on his side. Ken Rodiambo, just check from your own machine. I think some of us are able to hear you, Anthony.
Okay, thank you. So SMEs are the backbone. Micro, small, and medium enterprises are the backbone of our economies. A huge chunk of what drives the economy, and that's why you see when COVID-19 hit, the first sectors to feel the pinch, the SMEs. They close down. You can't go get coffee. You can't go to Java, do this. You can't go and do that. And the government feel the heat. I remember I did an analysis in the using data from KRA. We see a huge dip in revenues in those particular months. Okay, and that says that even the government, for tax purposes, they rely on what SMEs economies are doing. Now, how can we support them? I like what has been done across countries. The central bank has instituted monetary and fiscal policies to support some of these SMEs. But what I think is critical and fundamental is to what Diana said, to build the capacity of these SMEs. Okay, the world is changing, and I remember I had a conversation around the digital transformation in Africa and what is the space of the youth in the digital transformation. I like what Diana said. At least in Kenya, Kenyan youth are digital enabled. They have access to internet. They are very, very active on the net. The question is, to what extent we can build the capacity of these active Kenyan digital enabled citizens to be able to tap the opportunities of e-commerce, to turn around, what are these potential opportunities? What are these potential avenues where we can create job and self-sustain our people? So I think capacity building is key. Capacity building is key in terms of the knowledge transfer, in terms of course, there's a study World Bank released in 2019, it's called Gender for Parity, and one area that came out very clearly, the need for capital, the need for training, and the need also to build independence of the SME sector to be able to contribute to the economy meaningfully. So there's a lot to be done, and this can be nuanced. Can be nuanced across countries because of different policy priorities, but there's also a big room for our people to be engaged. The government needs to put in place the relevant policies, framework, and strategies that are supportive of youth in different sectors. There has to be incentives to encourage innovation, to encourage creativity in these sectors, because innovation is what drives growth also, from at least from economics and perspective, and creativity as well. And also create institutions, work with financial institutions to see how financial institutions can be supportive, especially for those who have liquidity constraints, those that don't have support system to get access to the relevant financial resources that they need to be able to implement some of the great ideas they have. So all of these put together should be able to help and take us to the next level in terms of boosting small and medium enterprises in our countries.
Thank you very much, Anthony. I see Jacob is saying you need to have a chance to grab a glass of water. You're very caring participants. Okay, Martin, I think as we give Anthony a chance to get a glass of water, he brought in the issue of SMEs and the need of the university to participate in the knowledge transfer, developing capacity. Maybe you could just comment briefly, how can SMEs engage in this context of regional value chains?
Thank you, Dr. Olukuru. And I really liked a point Diana had made, this idea of globalization and the open question, is it still a trend that's moving in a positive direction, or are we seeing countries taking a step back, and the importance of regional value chains? Specifically on SMEs, I know our audience is global and regional, so I'll keep talking of Kenya, I'll keep talking of Strathmore, but think of your typical university across the region and around the world, and I'll try to give examples from many others. Specifically on this issue of SMEs, it's been a really important priority in Kenya at the highest levels of government, all the way to the executive office of the president. Dr. Olukuru will recall in October 2018, we actually had a round table where His Excellency, the President, His Excellency, the Deputy President, key ministers, governors of the devolved unit, Nairobi, actually sat down and listened to a panel of SMEs from across a variety of sectors, articulate and prioritize their concerns. No holds barred, everything was put on the table. It's almost 3 years on, silently things have been happening behind the scenes. In 2019, after that particular event, there was our annual SME conference where those issues of SMEs were explored in the context of the CFTA. In the course of 2019, in partnership with JICA and AGRA, we had a conversation specifically focused on the rice value chain in East Africa. And we looked at clusters. In Kenya, we have rice production in Mwea, which is towards the central portion of the country. We have it towards the western part of the country, Kisumu and the general area closer to Lake Victoria. And we have it in the coast. So SMEs were actually given a chance to speak to key actors from government, from the private sector, and development partners. Anthony, you had mentioned earlier, there are a number of development partners who fund this report. So there's an opportunity for that monitoring and evaluation. In the SME conference last year, thanks to COVID, people couldn't meet. There was a virtual conference where that was funded by a combination of government, industry. We had NCBA Bank and Strathmore as a university, where SMEs again were central. Interestingly, an idea was birthed in that setting called the Network of Networks. And within a month or two, there was another gathering of those SMEs that had met, and they decided amongst themselves to establish a network that allows them to articulate their priorities directly to the senior-most levels of government. And then towards the end, we had an event built to last where SMEs in a Kenyan context got to reflect on what they can do globally. We had a guest speaker, an academic, Dr. Andrew Godley, who shared about the region of Reading in the UK and how they've come together and been able to make a change. The reason I invoke that is because Kenya, I sense we have learned from an experience in Rwanda, something called Umushyikirano. We teach about it in our classes, that allows key actors to meet directly with the president and the senior team annually, indicate their priorities, and then individuals actually held to task. Mmefika wapi? How far have you reached on those things you've said? I noticed Kenya has tried to replicate something comparable. In Uganda, there's entrepreneurship is very strong. In Tanzania, our departed president, His Excellency Magufuli, was very focused on delivery. I use that to point out that for the SME sector, a real opportunity during COVID is to use technologies like ours, the way we are gathered here, across these countries. Could we have gatherings of the SME sector, articulating their priorities? And then for a report like this, Anthony, I would challenge, could we actually identify why trade across the Busia border has reduced? Why Namanga, why Moyale, why has it reduced? I don't know if the development partners have commissioned studies or actually tried to understand from the bottom up, working with individuals like Diana, individuals who have gathered in a setting like this. And then Dr. Olukuru, for the same SMEs, I wonder how a session like ours today can act as a way of bringing the COVID dimension and the East African community dimension back into the conversations that I'm mentioning in all these conferences we've had. And then in closing, Kenya is in an interesting place. It was the first to ratify the CFTA, first to do all the amazing things. Yet Kenya is negotiating a free trade agreement with the US, not waiting on the AFCFTA or the AU. Kenya is negotiating an EPA with the UK, it just went through, an EPA with the EU. Kenya has agreements with China, Japan. And at the end of the day, all these agreements touch on trade, all these issues that Anthony raised in his report. And I wonder why. I want to argue Kenya is a middle-income economy. The rest of the East African countries are least developed countries, but that shouldn't say much. Tanzania, I think quite soon will be joining Kenya in that league. But Kenya has also been asked to do something in the digital economy. Data keeps coming back. So the digital economy blueprint, Kenya is pioneering that on behalf of the African Union, Smart Africa, and His Excellency Uhuru Kenyatta went to Rwanda, met His Excellency Paul Kagame to launch that. So I want to argue that as an innovation system, there are things Kenya can test on behalf of the region. So when we get to SMEs, these gatherings that have happened, gatherings discussing IT, gatherings discussing geopolitical alignments, I think East Africa can actually pioneer something for the rest of Africa around this issue of SMEs. Back to you, Dr. Olukuru.
Thanks, Martin. I see Anthony has put up his hand. I think he wants to react on a few things you've raised up over there. But also maybe, Anthony, just to alert you, somebody was trying to find out more about the impact of inflation. So I think it was, let me see, she was the first one to put in the question. She was Catherine, if I'm not wrong, Wangeshi Gitata. Is inflation a lagging indicator? Therefore, having 2020 numbers doesn't give us the accurate picture. So just comment on that, as also you comment on some reaction from Martin.
Thank you. So as I indicated in the report, first of all, with respect to the report that we did, we see price stability. That's inflation. We don't see inflationary pressure across food and non-food items. We did see a little bit of price hike on transport, and because of lockdowns, prices of transport sort of went up a little bit across countries, especially in Rwanda. But we did not really see so much of inflationary pressure across countries, because I think if we had inflationary pressure, that would have caused havoc. Imagine you don't have a job and food becomes too expensive. It would have been disaster in our country. So I think we were spared with that. So if you, and this is the data again we extracted from UNCTAD. We also looked at the macroeconomic indicators from central banks across countries in the region. Now, the question is asking, is it even like it is an indicator, but we, as I said, we are spared. We were very lucky for some reason, and maybe that warrants an empirical investigation into it. Countries did not really experience price shocks that were really very detrimental. Now, responding to what Martin was saying, there are a few things that I wanted to raise. And this digital, first of all, regional value chain issue, it's a very politically sensitive issue. One of the areas that I'm currently thinking of writing a piece on is on regional value chain in East Africa. Because regional value chains, you have political players, and the same applies to CFTA. You have, if political players, you see some countries have not ratified. Why? Because if they feel CFTA or regional value chains are a threat to their interests and they're very powerful, they won't ratify. But if they're aligned to what is happening, they will definitely ratify. So regional value chains, as much as they're very important, they require political will. Let's be very clear. If political will is not aligned, well, it can still be in the shelves and we'll be dancing around left, right, and center. Now, on the digital transformation, there are two angles that I want to comment on. One is the supply side and the demand side. Now, on the supply side, if you read the UNCTAD 2019 digital transformation report, it talks about in the world, I think there are about 7 firms that have rights over all the digital things that we do. And that creates what we call digital divide. So we have to be very careful with this digital transformation. It has the good side of things, it also has the downside of things. And I can bring in the supply side issues and the demand side issues. The supply side issues, you think of setting the digital transformation in Kenya and having an infrastructure. Let's give an example of e-commerce where somebody can actually sell things online like the way we do in Amazon or in Jumia. In Nairobi, it's easy because the streets are properly mapped. Think about Ushago in Meru, up there. Or think about Ushago in Homa Bay. Or in Isiolo, in Mandera. Those streets are not mapped, let alone going there trying to sell. It's also risky. So do we have the infrastructure? Do we have the capability? That's from the supply side. Do we have a network of infrastructure that is reliable to be able to deliver on this? And this is from the government. And on the demand side, which then brings in the issue of digital divide, is the prices. Statistics from UNCTAD shows 1 out of 5 people have access to internet in Africa. Now, if we want to go full-fledged digital transformation, what does it mean for those majority of our grandfathers and grandmothers and nieces who are in the rural areas? Most often we think of Nairobi. Nairobi has what, 4 million people. There are 45 million Kenyans. What do we do with them? And when we are thinking of digital divide, when we think of digital transformation, these are issues that need to be put at the core of policy discussions. How do we forget about Nairobi, forget about Mombasa, forget about Kisumu? Think about in the interior Kenya, in the remote areas, how do these people, how do the youth, who are majority, by the way, not the likes of us who are discussing here on this platform, think of the youth who are in the interior, how will they have access to such digital platforms? Otherwise, we will create what we call in Swahili matabaka, the layers. There are those have-nots and those. We will perpetuate such inequalities in our societies. I'll stop there. Thank you.
Thank you very much, Anthony. Very extensive response over there. Now, Diana, there are many hard questions here, which I think I'll throw all to you. But to start off with that, Anthony mentioned about different players and a number of people who are in all this regionalism, and these are East Africa growth per se. So how do you think, what are your thoughts of how these various actors can really be enabled in order for them to play their role in this regionalism aspect you're bringing about in this conversation?
Thank you for that. And I just want to touch on something that Dr. Anthony said, and then I'll feed into the response.
Okay.
And that was the aspect of not leaving people behind. And that's very important, because even how we define trade, it's not just buying and selling. It's how we're sustainably using our resources so that tomorrow they can still be either available or they can still be replicated for the generation that's coming in. So what we're talking about here is not just that we want people to be able to interact or to be able to use the online media and all that stuff. We're saying that it needs to be set up in such a way that it's actually sustainable and can have a maximum influence and impact. And sometimes even when we think about it, I'd like to use the example of WhatsApp. You can have a message that just pops into your WhatsApp, and you might be the only one with a phone in the house, for instance, if you're in the village, and you can disseminate that information to other people. And farmers groups have been using this. So farmers are able to be told, okay, so the fertilizer will be released on this and that date. That one farmer who has the phone and has the WhatsApp group is sent that information, and they inform the other people in the community or the region. So the idea is that first we have to actually make these systems available, and then they can percolate. But we can't also say that because not everybody will be able to access it, then it's already a done deal. Because in essence, the only way for us to get to that point where we have maximum access is to start somewhere. We have to start somewhere and then we push forward. Now, going into the aspect of what the regional actors can do, or what kind of system we can build, there's a way we think about ourselves in East Africa. I'm very proud to say that I'm an East African, and sometimes even when we have our bands, they have the different colors and all that stuff. And there's this value in that, because even when I'm identified at the airport, I have an East African passport, not a Kenyan passport, so that I'm coming from this region. And sometimes this also has what you call them, limitations, because we can also say we have not been to the World Cup as East Africa, so I wouldn't have the embarrassment of it's only my country. No, the whole region, we have not been to the World Cup. So those aspects of how we understand ourselves, how we see our image, those aspects can actually be percolated into how actors respond, so that we can keep governments in check. How can I as an individual put my president in check if the president is responding not just as a region, as a country actor, but he's responding to other regional actors? He's accountable to the entire East African region. That can build momentum. The idea is, as we emphasize our development and all that, we have to really think of ourselves as how are we moving as a region? Because even if we had a crisis, essentially, you are more likely to get help from Kenya, your neighbor, who even understands the language. For instance, with Swahili, it was very actually heartbreaking that we're getting information about the loss of a president, and the region is not able to understand, because Kenya, we speak Swahili, Tanzania speaks Swahili, other actors were not able to understand. So the idea is we need to hold together with the things that unite us and then build further, emphasize our strength, limit our weaknesses, and push forward. That's the idea, that's the goal. Thank you.
Okay, thank you very much. Thank you very much, Diana. And I think there's a question for you also that was coming in just on that. How should East Africa countries help each other in this difficult situation? So it was just somebody just sent here, somebody called Mohammed Shaib. And what do you think, Diana? Just a brief comment on that.
Come again? The
I
question
mentioned
is...
had questions comes to you. Sorry,
yes.
Somebody was asking, how will East African countries help each other in this difficult situation? So the COVID has come in, all of us have suffered. Yeah.
Okay, I think I can even reflect a bit on what Dr. Anthony mentioned before. So Kenya actually, through Trademark East Africa, was able to secure funds from from Denmark in terms of response to COVID. And these funds were secured with a regional focus. So sometimes it's just the fact that a country can be able to gain some form of advantage, and it percolates or it trickles down to the entire region. So how, in essence, the question is, how can regional actors help one another to support the system or the advantages that they're able to garner from external sources sometimes, but also internally? If we can be able to trust ourselves a bit more, if we can be able to rely on ourselves a bit more, then it's possible to actually create advantages for the future. Yeah. Excellent.
Fine. So Anthony, this is a very interesting question from Jacob. He mentions that this report is like an audit. Okay, just like an IS audit, standard wherever. But he was asking, I think the question that follows up is the best. He says, who should we expect to take action based on this report? And maybe in line with that, there's another one just I heard over there from Joseph Gitonga. Are there plans to share the data to allow other people to help explore the findings, come up with more analysis, or even an interactive dashboard which continuously update statistics? I think those two questions can link in together, Anthony.
Okay, thank you very much. But before I answer these two questions, I want to also echo what Diana was saying on
Yes.
how can countries work together. And I've been a very big advocate of this. I'm a very strong Pan-African, so to speak. I'm a Tanzanian first, but I'm an East African second. So I really want to, I really want to emphasize that. I think let's take back historically. The borders were put by our colonists, our colonial masters. They are the ones who put borders. If you go back, if we were able to replay 100 years ago, you'll see that our forefathers were living in peace. There was no border, there was nothing. You see? So it's in our mind that, oh, I'm a Kenyan, I'm a Tanzanian. No, I think we have similar culture, we have similar values in many respects. And how do we work together? So one of the areas is coordination. Instead of fighting, let's complement each other. Because at the end of the day, when we hear bans, there's ban on this, there's ban on this, go to the border. I've had the privilege of visiting almost all the borders in East Africa, all of them. I'm telling you, you go to Busia, people are crossing like they are crossing in their living room. They just go back and forth. They don't care. Go to Namanga, it's the same. They don't care. They live in peace. When we come to Nairobi now, maybe now we start making noise, Kenya this, Tanzania that, Uganda this, Uganda that. So I think it's about time we become realistic with what is it that the common Mwananchi wants. At the end of the day, our needs are not statistically different, if I'm to put it that way. Our needs are mirrored, are the same. And I think just having that sense of we are together, we are one, working together, ironing out differences. Of course, differences will always be there. Even if you're twins, you fight sometimes, right? But how do you balance out those differences? Now, who can action the report? That's a very good question. I think my simple answer to that, because it's a very tough question, my simple answer is you and me. Let's play our part. It's not about the government. It's not about the university. It starts with us. Development and change starts with us as individuals. If we start changing ourselves, if we start changing our communities, collectively, cumulatively, we are able to action the impact. Now, some of these recommendations speak to policymakers, but who are policymakers? They're not machines, they're human beings. They're people who are generated from our cultures, their brothers, our sisters, the people that we know. So it starts collectively through all the levels that we have in terms of how we action and make decisions, from the family, from the community, all the way to the county, governor, and so on and so forth. Data sharing. So the beauty about this report, I might say, is we were able to get this data from central sources, from public sources. Okay, some of these data, we were lucky to get them before they were released. Some of them we got them from the KNBS, for example. They're available. Some of them we were able to get through our partners who are government agencies, and they don't really share. So I might not be able to share those data because we are given under strict terms, not to share with third parties. But most of these, after a while, they are usually released. If you go to the central bank, you will see them. But what I want to echo, it's not about only accessing data. What do you do with data? And now I'm reflecting with Dr. Olukuru's passion on data. You can have a huge chunk of data. In fact, this conversation is data point. Now we are recording, this is data point. What do we do with what we have? So I think building the necessary skills, the ability to collaborate and share skills and share knowledge. If you go online these days, especially, for example, from economics perspective, you have so many online open source platforms. People share data, people share information. Perhaps those are avenues we should explore. But then again, there has to be guidelines on how we do so, because they can be abused. And sometimes institutions are becoming very sensitive to avoid exactly that. So the issue is, how do we come up with a system? And I think Strathmore is a very good starting point as a learning institutions to bring together players at the university level, creating hubs or incubation, whatever that you call incubators, where these young people with the right skill set can be accommodated and be able to access some of these centralized systems. Thank you.
Very good. Thank you very much, Anthony. I think my job is very easy, just looking for questions and posting the hardest to whoever I think can handle it. Yeah, but I like the idea you mentioned about data. Having data is not really of great help what you do with data is what really matters, and asking the right questions. Data is only good as the questions you'll also ask. So that question you're going to ask, the quality of the question will give you the quality of the dream, and of course the quality of insight you can achieve from that given data. And with that, this is a very good question from Evanson Jomo. And maybe Martin, I think maybe you can just comment briefly. How can we utilize analytics to ensure businesses and SMEs can make sound decisions? Because you deal with SMEs, and I'm sure this is something you try to get them to really do.
Thank you for that question on analytics. And I'll try to connect it also to some of the inputs from Anthony and Diana. At the beginning of the conversation, I talked about innovation systems, and there's a whole set schools of thoughts on how you design an innovation system. Innovation speaking to a change that happens in the context of a gathering of individual societies. If you think of society as a system with different actors. I also talked about the policy process model that we use at Strathmore. You start with a problem, you formulate policies, you implement those policies through programs and projects, and then you monitor and evaluate throughout that process to see whether you're moving in the direction you wanted. It's a good framing for that question of analytics. Data in its raw form is not very usable, but data structured into information, structured into knowledge, assumes a very powerful form that will influence whether a policy decision maker, an MP, a president, a governor, some of those leaders Anthony was alluding to, moves left or moves right. Typically, we say give the decision maker 3 options, indicate the most adequate option, and then let the individual decide. But at times, it's not the best analyzed option that the decision maker will go with. And Anthony nailed that on the head. We may be talking here data, digital data, but without political will, particularly as it comes to global value chains, regional value chains, that conversation is going nowhere. So at times you give options where you have the analytics, they show what the data says, but you also have analytics that try to quantify what's happening in the political realm, what's happening in the geopolitical realm. That addresses that question. Most of our conversation has focused on data. Allow me to also touch on other aspects of infrastructure. Within this month, I believe it was this month or late last month, we've had a change at the helm of the East African community. Burundi was at the helm, Kenya is now at the helm. It's a rotating leadership. I've gotten the sense from the choice of the head of the secretariat out in Arusha that there's a big focus on the private sector. So the individual there was very strongly championed by the Business Council, had previously served in the Legislative Council, Bwana Mathuki, Peter Mathuki, or actually I believe he might be Dr. Mathuki. That social aspect of EAC, how can analytics inform decisions there? And I think, Anthony, a report like this is quite powerful through a body like that, particularly if some of the decisions end up with the private sector. Infrastructure. So when we think infrastructure, we think roads, we think vehicles. Nairobi today is unrecognizable. All of you will know that if you're moving from the airport, JKIA, westwards towards Nakuru, somewhere we call James Gishuru, Waiyaki Way has totally transformed. We are going to cut down how much time it takes to transit through the city. There are bypasses, not only in Nairobi, in Kisumu, in Mombasa, those urban centers, Anthony. The standard gauge railway from Mombasa right now to Naivasha, there's a refurbishment of the old rail, so all the way to Kisumu. And then from Kisumu, MV Uhuru can take you to Entebbe, can take you to Mwanza, but also Port Bell, Jinja, Bukoba, Musoma. So you can actually move goods from the coast of Mombasa to a port in Uganda and Tanzania and onwards into inland locations in Africa, much faster than happened traditionally. In Kenya, there's urbanization happening at a rapid pace, courtesy of devolution. So it's no longer Nairobi as the center. It's 47 urban centers, which then move outward to the periphery in those localized settings, but major urban centers like Nairobi, Kisumu, Kampala, Dar es Salaam, Dodoma, etc., that are actually much closer to those devolved urban centers than Nairobi was. Moyale, and ultimately we think of Addis and others as you move northwards and eastwards. Analytics on all this, and nobody collects this data, nobody assesses this data. Anthony, I know you've said some of this data will end up back in the governments for strategic reasons. There's a whole school of thought that says, make it open data, make it available to everybody. But that's a discussion for another day. For national security reasons, some data is maintained. I wanted to bring one last dimension, and it's a country we've not mentioned in our conversation today, China. China's fingerprints are all over the East African region for very interesting reasons, infrastructure that I've just mentioned. So there are some SMEs that love China because China has made the market accessible. And for some of this changed infrastructure, our thinking also probably needs to change from a commerce perspective. So what a report like this tells me on that question of analytics, and the earlier question that was talking about inflation and lagging data, Anthony, coincidentally, I consider Meru home. And with my nuclear family, my family of origin, we've actually been telling ourselves, can Meru play a role that Nairobi historically played? I know one of my colleagues, David Ndolo, is here. David Ndolo produces fish, which he sells through his company. I believe it's called Nyanam. David, forgive me if I've gotten the name wrong. But David can actually track down to the lake the value chain for the fish. Earlier, we were talking about rice. As East Africa, using analytics data, and it's the reason I think it's important to actually have internet down into the village, we can actually totally transform in the way China and Shenzhen and WEU have reimagined products that are making to the global markets in Europe. I mean, we can dream that big. Now, that said, issues of political will, and also I think issues of access to technology, the digital divide. I wish I had the answers to those. I throw them to Dr. Olukuru. You are the man of data. But I want to argue that EAC should be moving at the pace of Singapore, Japan, in that digital realm, even as much as we are slowing down. So maybe who in the East African region, it could be the regional capitals are keeping tabs with the global capitals, but we are also carrying everybody else along, those issues of inequality. I want to argue at Strathmore and other universities in the region, we are beginning to retool to be able to do exactly those kinds of things. Back to you, Dr. Olukuru, analytics.
Thanks, Martin. Yeah, I'm really itching to comment, but today's not my day. So I'm just trying to pass the baton to a number of you guys in the panel today. But there's a lot to do with analytics for sure. It is the refinery of data. So at the end of the day, we can collect all this data, have everything, but in order to get that information, to get that knowledge, and then end up making the insights, you need the analytics and of course the investment into the tools. Now, there are many questions really coming in. Anthony, I think some of them you can handle. There's a gentleman called Victor Sang. I think he's a financial economics student, and he had a very interesting thing here. He says, East Africa's real GDP and trade volumes grow almost every year, but the majority of people do not feel the expansion. How can we use data to form policies that will ensure providers of labor benefit equally to owners of capital? I don't know how you can respond to that. Maybe also just tweaking in with the pandemic.
Thank you. So before that, before I answer, there was a question you had raised that I forgot to answer. Maybe I can use 1 minute to answer that. Okay. There was a question that was asked why cross-border trade is going down now, and how do we explain that? I think I skipped that. Okay. So there are so many reasons why cross-border trade is going down. And I think when the COVID-19 started in March, one of the things that I used to get data from KRA on daily traffic flow of cargo across borders. I used to get those data. We usually get those data from KRA, from URA in the region. And one of the things, it was exactly what I said in the report, transit times. During COVID, all these COVID protocols, lockdowns, they also sort of exacerbated cross-border flow of goods. And somebody, I think, in the question said the same on Malabar. Maybe we can come back to that later. Now, how do we translate? This is an old question on how do we translate macro to micro impact. And most of the things that we see, even when we say our countries are growing fast, Rwanda is growing at what, 9.2%, Tanzania is projected to grow at 4-something percent, Ethiopia. But if you look at the granular level, you go down at the meso and micro level, you don't see that much growth trickling down to the common mwananchi. So it's a fundamental question in development. It's not necessarily a trade issue, it's a development issue. And you know how macro success can actually transform to micro success. It's a whole range of issues. There are a whole range of issues that need to go into effect. And as we all know, for example, right now we are talking of CFTA, but CFTA is just one policy instrument. CFTA needs to be aligned with industrial policies. It needs to be aligned with sound macroeconomic policies. It needs to be aligned with sound fiscal policies. It needs to be aligned with other development tools that are in place. So economically, if you do, because first of all, remember, when we think of GDP, mathematically, GDP is just Kiswahili tunasema pato la taifa. So it's just the sum of all economic activities coming from consumption, coming from savings, coming from investment. And consumption, you're talking of public and government consumption, investment, government and private and public investments. You're talking of savings. You're talking of all economic activities you can think of. Okay. Now, when we say GDP is growing, mathematically, it's just calculation of numbers. You take what's the total national income divided by the total number of population. We have seen some new ways of thinking that have challenged that conventional way of thinking around how we express economic development. And Amartya Sen is one of those people who got Nobel laureate a long time ago on proposing different ways of thinking about development, measuring capabilities and functioning and so on and so forth. Now, translation of macro success. GDP is growing, fine. At the macro level, everything is growing well, but how do you move? There are institutional issues in place. There are capacity issues that need to be taken into account. You know, there are policy issues that will be taken into account for this macro success to translate into micro success. And one of the fundamental challenges our countries are facing is exactly at that middle layer. How then do we move from recording 9% growth to bring it down to common mwananchi? Do we have institutions in place? Do we have systems in place? Because if you don't, even if you're growing at 100%, there's no way that will trickle down to common mwananchi. And that has been an issue. So I don't think I have an answer on how we can do that. Perhaps if agrarian economy could work, maybe agriculture is one way to tap, because majority in the agricultural sector, agricultural transformation in rural inclusivity could be a way to go about it, because majority of our people are working in the agricultural sector. It could also be to do with education system, building capacity and capability, basic functioning of individuals to be able to be more productive in the society. It's a big question, honestly. I don't think I can do justice to answer in 2 minutes. Thank you.
Yes, definitely. I know if you go in depth, you'll end up into politics. All those are questions for the members of parliament and governors to make promises. Thank you very much. But at least you've managed to try to answer that. Let me see a number of questions again here. Maybe I'll switch quickly to the Q&A section. And wow, I'll avoid the word BBI. So I'll just go straight to what the fellows like to ask there. So Brian Dalila will want to know about this digitization. He's calling it digitax. So maybe Diana, because you talked about digitization and all this coming up. So how can we grow in digitization past COVID and with this threat of digitax?
Thank you. And I like the question because it's very fresh-faced. It's really touching on something that has been affecting a lot of young businesses, especially, and it's also affecting the kind of businesses that I think young people are also very actively engaged in. I think the question of digitax is a balance between two things. So there's the side that the government wants to be able to raise revenue, and it's found that there are people who are working and they're getting a lot of money, but it's not necessarily in the typical tax domain. But there's also the side of what reasoning have you given the individuals or society to be able to, want to actually contribute towards this digital? So there's the aspect where the government, and I'll reflect back on one of the things that Martin mentioned earlier. When we did the SME Network of Networks event, it was very clear, at least for me from the panelist side, that the government is actually trying to incentivize individuals to be able to move towards digitization and to be able to actually pay this tax. So think of it this way: if COVID had come at a time when there was this digital record of sorts of how much somebody is earning from digital trade and the likes, then if government was to intervene and to support a business that's actually mostly, let's say, digitally based, but has had a really negative impact and is unable to trade, they would have had some form of record, to see this is how the business has been going, or this is what I understand about this growth. So in a sense, it comes down to two things. How can the government actually incentivize people to trade and to at least have some form of reason to actually report accurate data rather than hide and just run away? But also on the side of the people, how can we be protected, quote unquote, so that it's not every single small section of business that's to be taxed, because that would also make an individual fear. I mean, why should I open a business if I'm going to just be taxed and it's going to take away the larger sum of my funding? So it's really a question of perspectives, and that's a debate that's still open. I'd say that we still need to debate about it a lot more and include as much public participation as possible, and not just for lip service, that actually when we say that this digital tax is hurting us, the government is able to come back and say, okay, so we have said we're going to give you a period of transition. Those are some of the things that would easily be at least acceptable, or at least, if not acceptable to a huge group of the citizenry, but acceptable to some sections of the citizenship. And that's an active democracy. And I think it's a very important pillar.
Very good. Thanks a lot, Diana. And I think that just goes into all aspects of data digest. It comes also with the digital transformation. So try to find out what's happening in other countries. What are the success stories? Then from that data, we can get an insight on what's the best way forward on that. Now I go back to Anthony. There's a maybe also Martin could comment on this. A question from Henry Kisenga. And he's talking about, do we have a regional export-import bank to support intra-regional trade, and one that can offer structured finance solutions for this purpose?
I can go first. Yes, we do. And okay, in East Africa, we have the East African Development Bank, but I'm not sure how is it performing. But in Africa, we have the Afrexim Bank. And Afrexim Bank, which is based in Cairo, it's actually, I think they have recently entered a partnership with African Union to support payment system for, I think they invested, $1 billion, something like that. I've been following some of their work. So Afrexim together with Afro Champion Initiative, ACI. This Afro Champion Initiative, and Trademark has an understanding with Afro Champion Initiatives. The Dangote, the billionaires of Africa came together and set up what they call Afro Champion Initiative to spur socio-economic transformation development in Africa. And they work very closely in terms of raising and mobilizing the relevant resources that are needed, for example, to take advantage of the CFTA, to build the infrastructure, to investment, industrialization in Africa. So Afrexim Bank in Cairo does that, and it works very closely with African Development Bank in some areas and African Union to support some of these regional initiatives, especially on African continental free trade area.
Okay, very good. Martin, any comment on that?
Yeah, thank you. Mine will also be visionary, so over and above explaining the institutions that exist. I want to think of an SME today. So somebody who's producing beads in Narok County and wants to sell them in Accra, Ghana, within within the major market, right in the city. I want to think of someone in Kigali, Rwanda, who wants to consume a leather product from Karioko in Kenya. And this is not imaginary. This is actually happening. If they wanted to buy raw materials in bulk, process and then sell in those markets. And while they are a Kenyan in Accra or in Kigali wants to come back with products from their respective countries, maybe something around cocoa, chocolate in Ghana, Ghanaian branded, or in Rwanda, one of like high-end tea that can then be sold back in Nairobi in one of our various restaurants, or kibanda, as we like to call the very small micro ones. If they wanted to borrow money at the scale that has just been described in the question, where would they go? And I want to assume it wouldn't be, an export-import bank, yet this would be such a transaction. So the visionary dimension I want to argue is our existing commercial banks that are assuming a Pan-African footprint. And so the two banks I mentioned, ABSA, which was formerly Barclays, and NCBA, formerly NIC and CBA, have a continental footprint. One of them has a Pan-African footprint. And then there are also banks from outside the East African context that are very active across the continent, EcoBank, et cetera, et cetera. Could these banks assume the role at that micro level that typically will be played by much larger institutions supported by the public sector? So we are talking of and Anthony, I don't know if I'm wrong, but if I go to an SME and ask them to take me to those two banks you have mentioned, one will tell me I've never been to Egypt. The other one will tell me I don't even know where in Nairobi to go. So there's an element of visionary in that. With products like Safaricom and M-Pesa, particularly Safaricom being a continental company, Vodacom, the MTNs, etc., can we reimagine lending in a continental context and clearing as it happens across national borders? In the Kenyan context, out of our 2018 conference, there's a particular product that Safaricom has that I think resulted immediately from that conversation. It's not M-Pesa. When you want to borrow in the short term, Diana, John, Anthony, you might, Fuliza, is it Fuliza?
Fuliza.
Yeah, Fuliza. I believe Fuliza was a product that emerged out of that 2018 conversation I mentioned. For our entrepreneurs in this conversation today, could we challenge the commercial banks to think in the same way? Then briefly, Dr. Lukuru, the question you directed to Diana, KRA and KEPSA, the Private Sector Alliance in Kenya, KRA, the Revenue Collection Agency, have actually worked very close with key stakeholders in the Kenyan market in the context of the digital service tax. Many disagreed with KRA's position. I think that part of the logic there may have been informed by other government priorities. How do we meet revenue targets? But there's another dimension that speaks to technology, Anthony's point, active in a Kenyan and East African context that is from China and Japan and America. And transactions being done by somebody delivering Uber and delivering all these different companies, just a portion of that revenue trickles down to the local jurisdiction. And governments are trying to figure out how do we capture a portion of that economic activity when it's happening in borders that are not contiguous to where the geography is. And there are no easy answers. I know KRA in their annual tax summits have thought through that. I think the wisdom lies amongst everybody who's here. If it was done the right way, that allows government to tax a portion of those resources going outside African borders, but in a way that's not punitive and is preventing innovation from happening, and that is also encouraging production of local technologies, what's the right way? So Anthony, Diana, Dr. Lukuru, I've taken a bit of a slight tangent, asking us to imagine what's possible, but reflecting against the reality that exists. And being in a university, I guess I'm allowed some of that. And I hope I'll attract some of you who are on this call as our future students to help us with all these difficult issues we are throwing your way. Back to you, Dr. Lukuru.
Thank you very much, Martin. And I think with that, I can try to say we are like running short of time for all our participants in this webinar. I know there are very many questions. We've not managed to answer all of them. Like I got like around 25 questions and still others are still online. But I hope we can organize to see how to respond to them and maybe reply back to you via email if you did register for this webinar. I think just a quick comment on that we are going to be sharing the presentation, so we'll send you the link of the recording. And also I think you can be able to access the report. If you go to the Trademark website, you'll find the published report in all pages. So the slides were just a summary of what we are having. So I'll just maybe try to ask the panelists to give us some closing remarks on what they'll want to let the participants go with as a takeaway point. I know, like for Diana, in fact, one key thing for you would be like, why did you have to choose to go into this policy field? I know young fellows who want to go engineering, medicine. Why into policy at such a young age? And maybe you can also give us your closing remark.
Thank you. Yeah, I'd be happy to. In terms of why I chose policy and why now, I'd like to encourage us to think of how we can shift our mindset. When we're growing up, I mean, our parents had the luxury of thinking about, if I enter this field, how will it look like 10 or 20 years from now? For us, any field that you enter into 2 or 3 years after, it's shifted, it's changed, and even some of the dynamics of how it's operating have really fundamentally shifted. So if you're still thinking of what it will look like 30 years from now, that might be too late. You just need to think of 2 or 3 years from now, how is this field going to be operational? How will I make a difference in this field? And that's where I came in, because I was aware of the Africa Continental Free Trade Area. I'm aware of what the Secretariat is working on. And I felt that this is where I can contribute the most, because also when an institution is still in its young stages, it needs as much support, because sometimes people tend to have really large expectations about what it's supposed to deliver, but incrementally, slowly by slowly, it's actually possible to deliver on some of the promises that are made. Going back into what I think that people should be able to at least capture. If you forget everything else that we've said today, please do not forget this, that we are all needed in this journey. And especially when it comes to advising policymakers, advising industry experts, advising people who are in government and the like, and also as individuals who want to get into government, remember that you are valuable and you're needed to analyze this information. And that's where the organization that I'm representing here today, the Africa Young Trade Professionals Program, comes in, because we are a group of young people. We want to be at the think tank for Africa. We want to create the sort of interactions among young people and also among industry experts that feeds onto one another, because sometimes people who are in the field, they don't have as much time to do the research, they don't have as much time to analyze this information, but we can analyze it. We can create the kind of reports that you can just come and say, okay, so based on an analysis that was done by industry experts and industry individuals, this is the best approach to use. You have 2 or 3 options and then you can easily implement it. So that for me is my final take on things. And just the last aspect would be, when it comes to information sharing, share everything you know, share everything, so that you don't rely on the 1 or 2 points of information that you've been holding for the past 6 months. Share everything, because it will force you to replenish your information sources. It will force you to think deeper, because if you have this one idea that you're holding on to because you don't want other people to know, and you're constantly holding on to this one idea, it means that you're not continuously growing. You might not even realize that you're going stale. So share everything. It will force you to try and get more information. That's my final take. Thank you very much.
Thank you, Diana. So I'll come to Martin Mbaya. So maybe as you think of your closing remarks, maybe also just help me think of, maybe respond to this. So given the changing geopolitical landscape, how should East African countries think about this report and the conversation we've had today?
Thank you very much. And I think that's an excellent point to close. Trademark East Africa was specifically called out during the March conversations at the House of Lords on the Kenya-UK EPA. And it was specifically this idea of strengthening development outcomes. I know that conversation came up a little bit earlier. Discussions are happening in the UK. Discussions are happening in the rest of Europe. Japan through TICAD, China through the Belt Road Initiative of Xi Jinping, and the US, currently Build Back Better, previously Make America Great Again. I just noticed that East Africa, either through Kenya or any of the other key presidents, are represented in those global conversations. The biggest headache for all these leaders in an East African context is in the graph that Dr. Anthony showed, is that the formal sector is doing well. The informal sector, kuna shida. And Dr. Anthony, I think the number I'll go away with is 97%. I kept hearing you repeat that number over and over again. So for geopolitics, my plea kind of to everybody out there, or my pitch for those who are more commercially oriented, is how do we solve this 97% problem? And there are two questions you had in your long-term policy options. How does trade grow? So you asked, should it be through intensive margin, essentially more of the same products? And you also had one other question where you were wondering, Anthony, how can intra-Africa trade under the CFTA support economic diversification? So my closing thought for all those who are here is actually throwing the ball back to the court. All the participants, all those who are watching this recorded version, how can I reach you? How can I contact you so that together we can solve this 97% problem? And I'm biased. We're looking for undergraduate students. We're looking for graduate students. We're looking for executive education students. And when I say we, it's not Strathmore, it's we in academia. We are looking for governments. We are looking for CEOs who we can sit down and address that 97% problem. So my parting shot is this is just a beginning of a conversation. You've noticed SME in a Kenyan context from 2018, bado tunaendelea pole pole and gradually working towards our direction. Thank you for the opportunity otherwise, and back to you, Dr. Olukuru.
Thank you very much, Martin. I like the way you say we are looking for all these people out there to come, combine efforts, and see what we can share and really tackle this situation. There are challenges which all of us have solutions. Of course, I like when I go to that MPPM class, Mass and Public Policy, MMA class. They're all different sectors, but at the end of the day, there's one common denominator, data. Good, Anthony. I know you have very nice words to close this conversation.
There's so much to say. There's so much to say, to be honest. I think I feel like we're just starting this conversation. We should probably continue.
We can have phase two. We can have part two.
I love development. I'm very passionate about development. That's something that I probably, if you cut me and take my blood and go to DNA test, you probably see development. You probably see research and policy. I am very passionate. I don't hide. I'm not ashamed to say that. But my one key word I would say is all hands on deck. All hands on deck. Development in our countries is not something that we can wait for someone to do it for us. We need to do it ourselves. We can have partners, we can have people, well-wishers who are working with us, but that change needs to happen from us. It needs to start with us. There are so many opportunities. Africa, I always say, one of my biggest motivation, maybe I can share a little bit, one of my biggest motivation to left West to come back is precisely that. You know, you sit in the ivory tower and you realize every day you're talking to the same people. You go to development conferences, you're talking of this model, that theory, that. It doesn't really trickle down to the people. Now I'm talking to the agent of change. And we are reaching out to the people who are listening to the research that we do, to the analysis that we do. And these are the people who are going to take it up for action. Okay. So I think all hands are on deck. Development, we should embrace development in its totality. It's our responsibility to move forward. It's our responsibility to take our countries to the next level. Now, if we come to, and before I come to this point, I always say this everywhere I go in East Africa. We complement each other. We don't compete. Let's complement each other. I really implore this because especially for the youth, the type of the world we grew up, we are very, what Adam Smith called self-centered. Let's be altruistic. Let's support each other. Let's build each other. Because at the end of the day, if Martin succeeds, there is a spillover effect somewhere. If it might not be directly to you, it could be to your auntie, to your cousin. Okay, so let's work together. Development requires that collective effort of us working together in a complementary as opposed to competing, a competition manner. Now, let me close by talking of the CFTA. the African continent of which we're there. This is real deal. This is the opportunity for Africa to rise. We are 1.3 billion people. That's a huge market, my friend. 1.3 billion people. If we choose to close, we can trade with each other. One thing that I've been talking to Kenyan policymakers, and we're going to talk about it next week during the CFTA national strategy, is how, and I really like it from Kenya, because the policymakers are focused on trying to tap, how can we tap this, can we catch this opportunity of 1.3 billion people as a market? How can we sell out more? How can, and for the youth, I want to encourage you, don't sit on your WhatsApp and chat and Facebook and waste that precious time. Use that time to build yourself. Ask yourself, CFTA is the moving train right now. Am I going to be overtaken by events? Am I going to jump on it and run with it? What are the opportunities that I can tap into this? If not, who are the sponsors, players who can work with me, who can support me to get there? This is my plea to the youth. For policymakers who are listening to this, let's make policies that are impactful. Let's make policies that are people-centered, policies that reflects the needs of our people, policies that will have meaningful impact to the lives of our people. Because at the end of the day, true development is people-centered. Thank you.
Thank you very much, Anthony. Thank you very much. I like that. Make policies that are going to be people-centered. And I think all that comes down to that key asset, which also was the background of the whole this webinar, looking at data. So we can only be able to manage to complement one another, manage to push development in our continent by looking at the new latest factor of production, and that's data. So they talk about the new oil, but also it's the gold, okay? We were told from the report how Tanzania made a huge gain from gold export during the pandemic. And that tells you, he who has the gold had the power. So data is the power. Being the largest continent, okay, in the world, largest population, largest growing population with a greater future, those are numbers. That's what can give Africa the future, okay? So we can be able to tap into that only if we can mine it, mine that data, utilize that data, get the insight from that, and let each and every policy we make. So any leaders watching this, participating here, an executive person over there, that upcoming student looking into going to influence this continent, try to get into data. Let data drive your leadership. Let data be your driver to your policy. Is it evidence-based policy? Whatever sector you are, we didn't speak much about healthcare, but you realize all that will depend on data. And you'll find with data, we can be able to change everything. So I'll just close by saying we need to press that reset button. It's a new game. Go back, reset our button, and look at data. What data am I generating? What data do I have access to? How am I utilizing this to create policies? And that's the same thing we try to do with our students. Anybody in the public policy class, we are always pushing you in our QA class, go look for data, see if you can come up with a policy brief that's data-driven. We have agribusiness class, go look at data. Can you apply something in your real life scenario and see what you can add from that? So I'll just conclude by saying we've just created a ripple. Okay, you've thrown a stone in the pool of water. We've created the first wave. Can we try to make that wave spread further and try to see what else can we do? As I mentioned, this is just part one of all this. We'll be linking up many more times. I'm happy that Anthony is my student. So we will discuss more and see what else can we present to the audience again. Any other research will be coming up. We'll be trying to organize such number of AB webinars that can show us with data, there's a lot we can achieve as a continent. Thank you very much, Anthony and Pole Sana, again, for the loss of our president in Tanzania. Thank you very much, Diana. I know you're freezing wherever you are, but thanks for taking time to speak to your fellow youth here in Kenya. And Martin, wonderful presentation. Thank you. We'll go back and again readjust and see what else to organize for the next webinar. Thank you very much for all the organizers in the background, Catherine, Caroline, Laura, Joki, asanteni sana.